Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY remains below 99 after two strong rebound sessions. Escalating Middle East tensions have lifted energy prices, fueling inflation concerns and pushing rate cut expectations from July to September. Although two cuts are still expected this year. Safe haven demand has also supported the dollar as the US Israel conflict enters its fifth day. The dollar has strengthened broadly this week, particularly against the euro and commodity currencies. Technically, the trend stays bullish while price holds above the 50-day at 97.94 and the 200-day at 98.34. After clearing 98.078, the next upside levels are 99.68 and the psychological 100 mark. Support sits near the 98.5 and 98.38 level. Next up, let's have a look at crude oil. WTI is trading around 73.6 after surging more than 3% on Tuesday, with prices up over 10% in the first week. Escalating strikes between Israel, the US, and Iran and expanding conflict into Lebanon have sharply increased supply risks. Attacks have hit energy infrastructure across the region. The Strait of Hormuz, which carries around 20% of global oil and LNG supply, remains a major concern. Reports indicate shutdowns in Qatar LNG, Saudi refining, Israel gas fields, and Iraqi Kurdish production. If disruptions persist, prices could move significantly higher. Resistance is around the 77.2 to $80 mark, with support around 73.2 and the psychological level of $70 per barrel. Next up, let's have a look at gold. Gold is trading near 51.70 after falling more than 5% on Tuesday. A stronger dollar and delayed rate cut expectation pressured prices, with markets now looking to September instead of July. Despite geopolitical tensions, gold did not attract strong safe haven flows. Margin-related selling amid equity weaknesses may have added some downward pressure to gold. Technically, the broader uptrend remains intact, though momentum has weakened. A pullback towards 5,006 and the psychological level of 5,000 is possible. Resistance stands at 51.93 and the psychological level of 5,200, followed by 5,265 and 5,300. Lastly, let's have a look at the Australian dollar, which is trading around 70.50, extending losses despite stronger Q4 GDP data. Quarterly growth came in around 0.8% and annual growth at 2.6%, both above expectations. However, our services PMI slowed and renewed dollar strength has weighed on the Australian dollar. The broader trend remains constructive above the 55, 100 and 200-day moving averages, but RSI has eased to 48.8, suggesting fading bullish momentum. Resistance is at 70.76 and the psychological level of 71 cents, and support comes in around the 69.52 mark, followed by the psychological level of 69 cents. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.